Hello, everyone, and welcome to the LTP AMA series. I'm your host, Joshua, and with me is June, our Head of Business Development at LTP. For those who don't already know, LTP is a world-leading digital asset prime broker for institutional investors and traders. LTP offers institutions seamless and secure access to many of the most popular SECs and DEXs, and boasts an average daily trading volume of nearly 2 billion USD. In addition to DMA and access to top fee tiers on exchanges, LTP also offers lending, capital introduction, and third-party custody services through some of the industry's leading digital asset custodians, the latter of which is the subject of today's AMA. So recently, there's been an increasingly salient focus in the digital asset industry on safeguarding assets and reducing counterparty risk, emphasizing the industry's concerted efforts to move towards a regulated and more mature direction. High-profile incidents involving centralized exchanges have underscored the critical importance of prime broker and custody services, ensuring the security necessary for institutions that are entering this evolving landscape. And today we have the privilege of introducing Taka and Frankie from Copper Co., an industry frontrunner in digital asset custodianship and a trusted partner of LTP. Our discussion will not only shed light on Copper's cutting-edge solutions, but will also explore their ongoing efforts to broaden their services. Additionally, we'll delve into how Copper's collaboration with LTP aims to deliver the most robust protections and innovative solutions for institutional traders that are navigating the complexities of today's market environment. Taka and Frankie, we're thrilled to have you here. Thank you for joining us as we unravel the layers of custody innovation in the world of digital assets. So to get started, yeah.
Thank you.
And just to get started, could you share a bit about yourselves and your journey and expertise that led you to your roles at Copper?
Sure. Why don't I start then? So my name is Taka. I've spent about 20 years in traditional finance, but generally I was never on the sell side. I started off in the proprietary investment teams within banks like JP Morgan and Goldman Sachs. And during that time, my focus was investing in distressed corporate events. So I would find companies that are in the midst of a bankruptcy or going into a bankruptcy, and I will buy the debt instruments of the company, whether it be bank loans or corporate bonds they're trading, or even if they're listed companies, they'll go out and buy the equities as well. And I'll move on working with these companies in order to restructure the company. And then after the Lehman crisis, I moved on to the hedge fund side because a lot of that business were shut down in investment banks. And then I moved over to Singapore, where I joined a hedge fund that also did the same, but across APAC. And I did that for about 10 more years. So I worked in Singapore, Hong Kong. In Hong Kong, I worked for the company called Davidson Kempner, which is now running about 40 billion of assets under management. And then in 2015, I moved back to Singapore to start my own hedge fund with a partner of mine to invest in value strategies across the Japanese equities market. So again, with a hint of distressed and value investing embedded in it, we'll look for companies in a particular situation, whether it be distressed or some kind of merger acquisition, or it could be just pure value investing, companies that are cash generative, very undervalued businesses, and then invest in those businesses. So I took that business to about, right now it's still running, it's about $4 billion. I'm no longer involved in that business. But then during that time, I got really interested in the world of crypto. I can dive into that a little bit more later if you're interested. But in 2021, I got an invite from an early advisor of Copper asking me if I wanted to join Copper to expand the business out in the APAC region. So I joined, and it's been 3 years since.
Hey, thank you, Taka. Frankie?
Yeah, a similar background. I've got 20 years in traditional finance. I started in hedge funds. I started at CQS, 20 billion under management right now. I started a little bit like a quant risk analyst, a bit of trading on the convertible bond desk before I moved to JP Morgan. At JP Morgan, I had similar role, quantitative research, but mostly on the exotic derivative side. And then eventually I moved in 2008, Merrill Lynch, in the prime brokerage of Merrill Lynch back then. It was before the merger or the acquisition by Bank of America. I was heading the financial risk team there for a number of years before I moved to trading. And then I moved to trading to head the structured financing trading team there at Bank of America. I stayed 11 years, and then eventually I moved to Netherlands for a couple of years before I had that phone call from a good friend, an ex-colleague at BAMO, to move over to Copper, where I am heading the financial risk and asset optimization group for almost 2 years now. Exciting journey, absolutely.
Yeah, thank you, Frankie. What extensive and impressive journeys you've both had. Taka, could you also tell us a bit about Copper as a company and what sets it apart and what core values drive its mission in the realm of digital asset custodianship and settlement solutions?
Yeah. So although I'm not a founder, I can use the founders' words how they started this business. So when they looked at the crypto industry, especially around crypto trading, they were looking for gaps in the market. Where are the opportunities that this business can expand into? And if you look at how crypto are traded generally, especially back in those times, is that you have your own wallets, whether it be hardware, it could be software, whatever it is, and then you have the exchanges that would custody your assets once you're trading on that exchange. In the traditional world, obviously you'll have the investors and an exchange, but in between there are many different parties involved in it, so that you can have access without having to directly go into the exchange to trade, right? So normally you wouldn't, KYC to NASDAQ to trade Apple shares. So you usually have like a broker that you'll have an account with, and then further on they'll have different providers in between to get you that access to buy that Apple share. In the crypto world, because of its nature, it was supposed to disintermediate the middleman, so they completely took out those things and then just had investors and exchanges. The problem is that when you have all the custody at the exchange, there is a big risk of the exchanges going bankrupt or having some issues where you can't withdraw the assets anymore. So when the founders spoke to a lot of the institutional investors, like hedge funds, the prop shops of the world, and asked them, what is something that you would really need to expand your exposure into the crypto industry, they said they need a proper custody solution. So that's how we or the Copper founders decided to embark on this journey to build out a custody system specifically designed for institutional investors so that they can trade on exchanges, they can go into DeFi, et cetera, all these type of products that they would need in order to facilitate their trading. And that is the original concept of Copper. And further on, as more and more people like us, like me and Frankie, have joined Copper with the background of traditional finance and knowing that certain things are meant to be in that place. Certain service providers will need to be in that place between the investor and the exchange in order to facilitate institutional investors better. So it's not just about custody, but what else do we need in order for our clients to be able to trade on exchanges without having to worry about your funds going missing. So we further developed various products, including ClearLoop, that LTP is using with us in order to expand and grow the industry.
For sure. Thank you, Taka. And so we want to learn some more about Copper's products. And Taka, given the competitive landscape, could you highlight a few standout features that distinguish Copper's offerings and contribute to its prominence in the digital asset custody sector?
Sure. So as I mentioned earlier on, Copper was designed specifically for institutional investors. Of course, we can accommodate various different client types, but we are very much geared towards this specific niche, and we designed our products specifically for that purpose. So I mentioned ClearLoop. So ClearLoop is a product that we launched about 3.5 years ago. This allows for an institutional investor to be able to trade on exchanges without having to move your assets to the exchange. So in a true nature of custody. So what we can do is we lock those assets that they want to trade inside their Copper wallets, and then we'll credit, or there'll be credited a balance on the exchange account in order to trade, so that your initial capital for trading wouldn't be exposed to the exchange counterparty risk. And once the client wants to settle their trade or close their trade, because we have exchanges collateral with us, we can do the settlements inside Copper also rather than at the exchange. So again, this will mitigate not only your exposure to your initial capital, but also your profit as well. And we build a trust structure on top of it, which is governed by English law, to make sure that not only on a technological level, on a legal level, the client's assets are protected. So that's one product that we developed, which is a product that the market didn't have. And I'm starting to see a few other custodial services or tech providers starting to build this thing out. But we had this, again, for about 3.5 years now. And we have battle tested this, and we've seen certain exchanges have financial issues, but our clients were protected from this situation. I could go into more other products. We also provide like prime services and other things. But look, I mean, I think the thing that I think particularly would resonate to your clients for LTP, I think, is the ClearLoop product, which I think that now we have 8 exchanges already lined up and ready to go. And then we have a few more in our pipeline, and we'll continue adding to that in the going future.
Thank you, Taka. So thank you for that overview of ClearLoop. Frankie, did you want to add any points to discuss, the pain points or challenges that ClearLoop addresses for institutional users?
Yeah, just one more quick point. I think, as Taka said, the number one is certainly the counterparty risk mitigation. And I think Taka made an excellent point on how do we mitigate that risk. But one more thing that I wanted to stress is the fact that through ClearLoop, I think capital efficiency is increasing, and that allows people to and the institutional investors to trade and move their assets, their capital within exchanges within milliseconds. I think that's powerful for obvious reasons, and it's something that apart from the counterparty risk exposure is another major pain point at the moment, and ClearLoop addresses it.
All right, thank you, Frankie. And could you also talk a bit about the specific measures and protocols that Copper ClearLoop employs to safeguard users' assets?
100% sure. So the very first point is, and Taka mentioned it earlier, I think, is the insolvency remote English law trust. It's a legal structure that we're very proud of. We structured one of the major legal councils over here, and it's battle tested for more than 200 years. The beauty of it is that obviously it's insolvency remote, and it doesn't form part of the insolvency estate of Copper. And if we go under, the exchange goes under, or the client goes under, that trust still goes on, lives, and the institutional clients can recover their funds, and so are the exchanges. The second point is the 4-hour settlement windows. The majority of the exchanges that we are having at the moment, they are settling every 4 hours, which again, if I were to compare it versus my previous life in traditional finance, which most of the times is T+2, best case T+1, it's a fantastic way to reduce risk and the exposure that people are having in the exchanges. The other thing is that we've got the right to margin call the exchanges, because the exchanges are obliged to hold collateral with us, and if we under our risk methodology, this collateral that they're holding is not enough, we have the right to margin call them, and even to default them into settlement cycle. So in 8 hours, this is if the exchange does not meet the collateral requirements, this is an event of default. I think these are the main 3 points that I would like to stress.
Okay, thank you, Frankie. Now I'd just like to pass things over to June to talk a bit about the collaboration between Copper and LTP.
Absolutely. So guys, so I have a few questions regarding Copper's partnership with LTP. So Taka will be starting with you. So could you please elaborate on how the partnership between Copper and LTP aligns with LTP's mission, and what specific advantages it brings to your clients, please?
Sure. So the missing piece, as I mentioned it in the beginning, was the custodians, but also prime brokerages is a very huge missing piece in the market. And this will allow clients to be able to even do portfolio margining across different exchanges, be able to do lending, etc., that would enhance their capabilities in order to trade crypto. And you could think of us as more of an infrastructure for prime brokers to use. As I mentioned, this ClearLoop solution and this capital efficiency. So if one client wants to trade on Deribit and then they want to move it to OKX, they could do it within seconds. And this will allow LTP's clients to be able to go across different exchanges, not only just doing high frequency tradings, but if you want to do like cross exchange arbitrage, etc., these things will enable LTP to be able to offer that to their clients using our infrastructure. So we're extremely compatible to your business. And this is how we want to align ourselves with companies like yourselves in order to grow this institutional environment for crypto trading.
Exactly, I totally take your point. So Copper ClearLoop product would help our clients to mitigate or eliminate counterparty risks. So yeah. So following the last question, Taka, from Copper's perspective, what aspects of this partnership are particularly exciting or strategically significant? And how does it align with Copper's broader vision?
Yeah, so as I mentioned, I think we're strategically aligned so that because we're very compatible as a business. And as Copper is a British company, we've been extremely strong in the European markets. And then for me, who's heading the APAC region, obviously the clientele that LTP has is very valuable to us because it allows us to have a foothold in the broader APAC region. Of course, LTP, on the other hand, can also leverage us to get into the European markets and the other Western markets as well. So I think there's a huge amount of synergies that we can see with both of us. And as I mentioned, the infrastructure is there for you to provide whatever services that you would like to provide. We can go into other products that we are going to launch pretty soon, such as like agency lending, etc. This will also facilitate LTP to not only reach their clients, but even the broader Copper clients in order to do the lending business. So I think there are many angles, and then what I'm looking forward to in the future is that we develop products together. I think that what's very strong is that in the beginning, Copper built out our custody product in alignment with our institutional investor clients, and then I think the next step for us is also to build products so that prime brokerage businesses like yourselves can fully utilize Copper and have the infrastructure necessary to take it to the next level.
Great. Thank you for answering the questions, Taka. So, Frankie, I wanted to understand a bit more. So I'm asking you this question. Sharing success stories often resonates well. Could you shed light on specific instances where Copper's solutions have had a measurable and positive impact on client businesses, highlighting key outcomes?
Absolutely. I think one of the key stories that I think we are all very proud here at Copper, it was back in June, I believe, when one of the major exchanges defaulted. That particular exchange, we had it integrated within our ClearLoop solution, and we had the right controls in places, and we had the right approach to the whole incident, and we managed to make everybody whole. All of our clients that they were trading in that exchange, despite the default, they were made whole not only on the initial capital that is always protected, but also on their P&L. We had a number of clients. We ended up over collateralized because of the way we collateralized our positions over here at Copper, and not only we made everybody whole, but we returned some capital back to that particular exchange. That is the very first point that I would like, or story that I would like to mention. with regards to the second part of your question about the impact, I think one of the very positive impacts of ClearLoop is the fact that the institutional clients, they have the ability to deploy more capital. I think they feel much more secure and safeguarded, and they can deploy more capital, and not only deploy more capital, but deploy it in a much more efficient way. And that obviously is having a very major impact on the client revenues. I think, these are the 2 points that I have in mind.
Right. So yeah, I think LTP is already like the first prime broker who has partnered with Copper to support OKX custody. So we're very excited about the following exchanges. So now Josh will take the turn, shift the focus back to a more general industry outlook. Thank you, Josh.
Thank you. So Taka, could you provide insights into how institutional interest in digital assets has shifted over the past year, and what trends are shaping this trajectory?
Yeah, so I have been in this industry, even personally and professionally to some degree, from 2016. And I would say the institutional interest hasn't really changed that much. I mean, they've been always interested in the payment side of things, where they can do cross-border payments within seconds, and also the tokenization of real-world assets. Now, what have shifted between then and now is the technological development, and also the furthering the understanding of the blockchain technology that has changed quite a lot. So, I'm living in Singapore. Back in those days, the MAS, the banks that are based here, were quite interested, not because they wanted to get into crypto, but it was more around the technology that they saw the advantage and said, look, we can do cross-border payments with these type of tokens. We can't really use Bitcoin for it, and then maybe you can use stable coins, but they were thinking, okay, well, if governments can issue their own tokens, what would that look like? Banks are experimenting with interbank payments with different currencies. Back then I remember people were using like XRP and a few other tokens to experiment with it. But eventually they started to kind of come up with their own type of products. They went from public blockchains to private blockchains, and then came back to public blockchains. I mean, there's been a lot of experimentation with it. And now with the around 2020, 21, with the introduction of like DeFi, they started experimenting with that. And then, also with the tokenization of real world assets. I mean, that conversation's been going on since I started looking into this industry, but only now that we've seen banks started to issue digital bonds and digital funds based on tokens. And I think that it's a monumental growth for a traditional bank or a traditional regulator to step into this space. And I'm seeing that the interest, despite the bear markets that we've seen, has grown. And I think that is not only to help with the crypto industry being so positive throughout these years, but there's a fundamental use case for the blockchain technology itself that really further this movement. So, back to your question, I don't think anything has really changed within the interest itself. It's just that a lot of things have advanced in terms of technology and understanding of the blockchain technology itself.
Interesting points. Thank you, Taka. And shifting to you, Frankie, looking forward, could you paint us a picture of the evolving landscape for digital asset custody, and also how Copper envisions contributing to a more user-friendly and accessible environment for the broader financial market participants?
Absolutely, yeah. Thank you for the question. I think the very first thing that we would all agree is that we need to make our space more easily accessible to every institutional and not only client. And I think we're working towards that direction. What we at Copper, we have recently announced is a multi-custody solution. So effectively what we're trying to do, we're trying to democratize our ClearLoop solution. So we want to make for every institutional client, the safe access to the exchange is easier. even if they wanted to trade from another custodian, having their asset custody in another custodian other than us, which I totally understand, having my risk hat on. Everybody would like to have diversification. So similar to the traditional space, you would probably like to have 2-3 different custodians. And so what we started offering and building is an ecosystem whereby institutional clients can trade from different custodians through our ClearLoop solution in all of the exchanges that we're having in ClearLoop in a safe and hassle-free manner. The second point, I think, is to do with the agency lending. What I think that one of the main things that we are missing right now is a safe or safer way to do lending. And I think that's going to help massively the whole ecosystem, especially with regards to the liquidity. And it's going to help people that they are holding long assets to lend it safely and allow more people to participate in our industry. And for that, we are working towards a solution whereby we are going to be providing safe rails for everybody to lend and borrow assets. And we want to do things the right way. We want to introduce collateralization. We want to introduce margin calls. We want to introduce haircuts based on the right methodology. All of these good things that the regulators and the traditional participants are using for years.
Okay, thank you, Frankie. And Taka, are there any common misconceptions or questions about digital asset custody that you find yourself routinely being asked or having to clarify?
Yeah, I do. Having done this for 3 years, I get this question all the time, and it's quite interesting that it hasn't really changed a whole lot, even over these 3 years. But generally, when you think about custody in a traditional space, whether it be BNY Mellon or State Street, there's not a whole lot of difference in what they provide. But in digital asset custody, it's really down to what you're building to what market. And I believe that every custodian in itself, creating wallets, etc., is generally the same in some sense, right? I mean, generally at this point, anybody can create wallets, etc. But the devil is always in the details. So, there are custodians that run like a hardware system called HSM, which is more like a box where you hold your private keys and you can add in multi-signature layers on top of it to make sure that one person doesn't have full access to the keys. At Copper, we use MPC, where we replace private keys with things called shards, and we need 3 parties to come together to access or create the wallets. But in order to do the day-to-day transactions, you need 2 shards out of the 3. So that's kind of like the very base layer of custody. And I've seen a lot of companies use MPC or HSM to further provide custody service for their clients. But then what's next, right? I mentioned about, okay, well, we're very focused on institutional investors. What are we going to create for institutional investors? They'll need access to exchanges. They'll need to access to OTC liquidity. They need staking. They need DeFi. All these things are really necessary. So we built all these products inside Copper so that clients can access these things without having to move assets frequently in the true nature of a custodian. I can't speak for others because, this is not my place to talk about other custodians, but there are very, very unique differences in how we develop products versus the other custodians in the market. And some custodians are much better suited for a particular client type than Copper. So, we do have to talk in very detail about these fine differences between custodians, but not, over explaining but what other people do, but, being able to explain what Copper is building out and what is it used for.
Thank you for that, Taka. And now, Frankie, what are the biggest challenges facing the digital asset industry today?
Oh, that's a great question. I would say that the number one challenge is the regulatory clarity. And I think we all have to help the regulators to shape these new regulatory landscape. we all need to understand that going forward, we have a very, I guess, very tense and I would say in some cases negative relations with the regulatory side. But I think we all need to understand that we need the regulators to come in to provide that clarity is going to be very helpful for the whole industry to move forward. The second part is, I think that we need to, like as an industry as a whole, we need to change a little bit our mindset. After the FTX incident, I think a lot of bad actors were kicked out, and that was a great thing, in my opinion. And now we are progressing towards a much more mature ecosystem. And we all need to work towards doing things the right way. And by saying the right way, I do think, again, using my risk hat, that we need to have risk management and the right techniques on the very top of our values. We need all to collectively agree that this should be priority for the industry.
Thank you, Frankie. I think you hit the nail on the head there. And before we wrap things up, we'd also just like to know a bit more about some of your other exciting partnerships around, multi-custody solutions. And so, Frankie, you already mentioned this a bit, but particularly, could you highlight some of the key aspects of your recent collaborations with Komainu and BitGo and how they're addressing the growing demand for diversifying counterparty risk?
Absolutely. I think we, over these last couple of years, I had so many clients on one side asking us for diversification, asking us to allow ClearLoop to be part of the other custodian solution. And we wanted to help, we wanted to democratize, we wanted to make the right thing for the ecosystem. And on the flip side, we had so many discussions with the exchanges. And one thing that was very, very apparent is the fact that it took us so long to integrate specific exchanges, not only because the legal documentation and the collateralization method had to be negotiated heavily, but also, we need to be honest, right? The technical integration was not an easy thing and took several months. So the exchanges would come to us and say, look, guys, we want to help the ecosystem. We want to do the right thing, but integrating with every single one of the custodians that they want to be in the spaces, practically due to resources, it's impossible. So how about you play that role? You step in and help us with that. So I guess we heard both sides, and what we offer here, we're democratizing the ClearLoop. We offer hassle-free and safe trading experience to all of our institutional clients, and then at the same time is a model that we share revenues with every other custodian out there. And believe me, this is just the beginning. We have just the Komainu and BitGo that you mentioned, but we've got more custodians coming in to help us with this with that endeavor.
Okay, thank you, Frankie. And sorry, I'm picking on you here, but Frankie, for those that are unfamiliar, what does the quote-unquote best of both worlds scenario mean for clients in the partnership with Komainu? How does Copper's proven processes and connectivity complement Komainu's on-chain, segregated, and regulated custody platform for the benefit of users?
Yeah, I think, best of the two worlds, I guess, it means that we have a custodian like Komainu that is backed by a major bank, is heavily regulated, and that is, I guess, as good as it gets. And then at the same time, we have Copper that is playing that with this major infrastructure that we can provide the ecosystem to trade in every single exchange, being collateralized, over-collateralized, I would say, without your assets leaving your wallet. So again, from my perspective, I don't think there is any excuse right now in any institutional clients to say, oh, you know what, we're missing this and that. But you have the best of two worlds. You have a custodians, great custodians integrating, and you have great rails, great technical solutions married with excellent risk management framework together. And that combination, I think it's powerful, and every single institution out there can trade safely.
Thank you, Frankie. And Taka, I'd like to give you an opportunity to talk about what specific benefits these collaborations bring for institutional clients, and how does it enhance their ability to trade on leading global exchanges while ensuring their assets are held within a regulated custody, ring-fenced environment?
Yeah, so as Frankie was alluding to, the exchanges don't really want to do an off-exchange product like ClearLoop with every single custodian, and every custodian will come up with their own version of an off-exchange product, which means that the exchanges will need to understand how it's going to look like, how is they going to function with each and every single custodians that's building this out. So having a unified system is something that is very key to enable exchanges to feel comfortable with trading with various clients across different custodians. You know, one of the things that I feel like in the world of crypto in general is that everybody wants to do their own thing. You know how many layer ones they are and how many layer twos they are. Generally, everybody is very tribal in this industry. But what this industry really needs is something more unified, something that that can service across multiple service providers. And I think that the industry generally naturally chose ClearLoop to do this, which I think is a monumental achievement for us. And what this will allow is that whether it be Komainu's clients or BitGo's clients or any of these custodians, will be able to enjoy the same type of access to these exchanges without having to expose themselves to counterparty risk and increase their capital efficiency. And this would allow for any other hedge funds or prop shops or whoever are trading to be able to say, okay, I understand ClearLoop already because I'm on Copper, but I want to diversify my custody risk. I don't want to put all my bags in one basket like in Copper. I want to spread it across 3 or 4 different custodians. And that's a natural thing for any hedge fund would do. I used to run a hedge fund as well, and we had 3 prime brokers, and then we had 3 different custodians. I mean, that is the natural thing for an institutional investors to do, is to de-risk many things, and this is part of it. And so, even for crypto, it's going to be the same thing. They would want to have a different diversification of custodians, but actually have a unified way to trade on exchanges. That part shouldn't change because they have to change their APIs and different strategies in order to kind of accommodate every single technology that's available out there. So, making this ClearLoop solution unified across different custodians would allow a lot more institutional investors to come into this space and experience the same type of trading activity that they would require. So this would, I believe, will enhance or even potentially grow this institutional class of investors that are trading crypto.
Okay, thank you, Taka. And with that concludes our AMA session with CopperCo. Real special thanks to our guests, Taka and Frankie, for sharing their insights and expertise on digital asset custodianship and truly enriching our understanding of this evolving landscape. And to our audience, we hope that today's discussion not only shed some light on the trends, challenges, and collaborations shaping the digital asset domain, but also emphasize CopperCo's and LTP's commitment to fostering safer and more accessible markets for institutional investors and traders. Taka, Frankie, your insights have been invaluable, and we're immensely grateful for your participation in our AMA. Sorry, thank you so much.
Thank you very much for having us.
Pleasure
Thank you, guys. Thanks.